Welcome to Just Some Guy Trading with 2021 World Champion Trader Kevin McCormick. Welcome back to Just Some Guy Trading with Kevin McCormick. This is my trader's outlook for the week of May 22nd. We have a lot of interesting information to cover this week, including technical and fundamentals when it comes to the grain market. We're going to start off with the S&P 500 and the Nasdaq, followed by natural gas, the US dollar, the crop report, and we're going to finish up with the grains, corn, soybean, and wheat. As always, my video will go in this order, so if one area interests you more than the other, feel free to jump around. This presentation is for educational purposes only. We're going to start off by taking a look at the Commitment of Traders report for the S&P 500 contract. If you've been watching my videos for the last month or so, you know I've been highlighting this extremely large short position that the hedge fund community has right now in the S&P 500, and they continue to keep adding to it. They refuse to cover this position, which I think could be coming this week with the setup we have going on. But before we jump into those details, let's take a look at the Nasdaq's COT report and the Williams indicators for that market. And then we're going to dive deeper using the DeMarc Indicators. All right, let's take a look at the Nasdaq COT report and the Williams indicators compared to the S&P 500. Very different story over here for the Nasdaq. I think you have some of these fund managers are hedging a little with long positions in the Nasdaq and going short the S&P 500. But the positions in the Nasdaq are much smaller in size compared to the S&P 500. But with that said, we see here commercials are now short the Nasdaq. Last time this happened, good sell signal, good sell signal. Pretty good sell signals back here. It took a little bit longer. So that's a nice setup going into the market, but it's not the only indicator we have going on. We've been overvalued in the Nasdaq for over a month now in every area, gold, US dollar, and bonds. And then this week we hit a bullish sentiment extreme, which to me is a contrarian indicator that we may be running out of buyers in the Nasdaq and a decline could be in our future. With that said, I'm going to jump into the DeMARK Indicators, combo and sequential, because we got some very important signals from them over the last week, and it's really going to guide where I think we could be going next week and a few more weeks out as well. Three, two, one. All right. We're going to take a look at the Nasdaq and the S&P 500 using the DeMARK Indicators combo and sequential and a few of the retracements as well. My viewers know that back in March, I did a special report on this sell signal 13 from sequential that we received, and I highlighted that I did not think that that was a sell signal we should take back then. I correctly indicated that we could have a small move, but sideways from there, and we could see outperformance in the S&P 500. Have I changed my mind with the current signals we have in place? Short answer is yes, but there's more details to come. You can see here that last week we hit a combo 13 that I had been waiting for about a month now, and we hit a 9 sell setup as well in the daily chart of the QQQ. Also on a weekly basis, on the QQQ, we hit a buying exhaustion 9 as well. Last week, we had some follow through this week that gave us the daily signals, but you can see here, this has worked great on a weekly basis here for the last, year or so. So this is looking like, we could be in trouble when it comes to the Nasdaq. But as everyone has heard from me before, I like to see these indicators line up across multiple markets and even different instruments for the Nasdaq and the S&P 500, more specifically the futures contracts compared to the ETFs. So you can see here we have that alignment with the Nasdaq with the futures contract almost identical to the QQQ setup 13 combo here. Same one that we talked about before that I said don't take it. 9 sell signal. But when we come to the S&P 500 and the futures contract for it, we don't have that combo 13 yet. So this gives me a little pause about if this sell signal is one that we should be taking right away. The one thing I want to highlight here is we're actually on a 11 combo for the sell aggressive setup, which I think, we could move a little bit higher and then trigger that 13. And then I think we could be looking for the market to turn over from there. Now, why do I feel that way? Let's take a look at the SPY. Compared to the futures contract, the SPY has hit the 13 last week as well. Combo 13 here. But this is what I feel like is going to happen here over the next week or so. Everyone in the media is going to declare that Thursday and Friday last week gave us a breakout because we got up above these levels. But in my opinion, our levels of resistance are actually back here on this August 17th, 2022 level, which means we could move all the way up to 4,300 before we have the market sell off and a short correction in what I believe is actually the start of a new bull market. So I'm not calling for the market to crash or move down heavily, but I think what's going to happen is we could actually move up another 100 S&P points, which is a ton of money on these contracts. And then when we get into that 4,300 level, then the resistance is going to come in. We'll have this short covering rally in some of that hedge fund position, and then the market's going to take a nice healthy pullback, give us all an opportunity to add to our long positions in our retirement accounts. But as a trader, I feel like I'm trying to thread the needle here. We'll talk about it more in my special report this week, but I think our move this week is going to be higher and then followed by a decline because of the buying exhaustion we're seeing in the market today. We also have some Fibonacci levels, lots of things aligning saying we could go a little bit higher and then a decline. So with that said, let's take a look at natural gas. All right, back to natural gas. Did we get the breakout we've been looking for, indicating the bottom in natural gas? Short answer, maybe. I know, really helpful. This week we did get that breakout that I've been talking about that we needed to see, a significant move higher and then have the market hold it. That's the big question I'm looking at right now is, are we going to hold this rally we had in natural gas on Thursday? We do have a good indication here that the trend of momentum is moving up in the Williams %R. We made lower lows in %R. We didn't come all the way down. Those are positive signs. But if we take a look at the commitment of traders report, one of the problems we have working against this right now is the commercials, who are mainly right now the producers of natural gas, are selling heavily on these rallies. They want to lock in selling their natural gas at these prices. So I prefer to see the commercials in their buying, but until we get hot weather this summer, we aren't going to have that big demand need for natural gas. So this is a negative right now that the commercials are selling. We also have natural gas overvalued now against gold, US dollar, and bonds. And with this rally we had this week, no big surprise, big high move higher in sentiment, which has been a great selling indicator for the past 6 months or so. Sell here, looks like it's a sell here, a little bit of a sell here, sell, sell. The things that we do have working for us in natural gas are the seasonal and the pinch punch are both saying that the bottom could be in. So what am I looking for right now when it comes to natural gas? This week's going to be very important. Well, what I would like to see happen is we pull back a little and then rally again. I want to see a higher low that is confirmed. We had it happen here a little bit off of this area, a little bit of a higher low, but us securing this rally and staying above the moving average, above the will stop, is going to be very important, indicating that natural gas can move higher. So that's my outlook for natural gas for this week. Let's take a look at the US dollar next. All right, I just wanted a quick discussion about the US dollar. I always pay attention to the US dollar and trade it every once in a while. But the main reason why I take a look at the US dollar is because most of the commodities I'm trading are priced in dollars. And it can have a negative or positive effect on your trades, and it's something you should pay attention to. Because this week, we had a significant rally in the dollar recently. We're talking about a good 3 cents move higher. And when the dollar is moving higher, the commodities usually move down as the dollar moves higher. And so this is something we need to keep in mind because trend momentum and Williams percent R is showing that, hey, this might be a move that can continue. But from a technical perspective, I'm not seeing a whole lot out there that says that we should have a large rally in the dollar coming. But it's something we need to keep an eye on because if it continues to move higher, it's going to be a drag on the prices of the grain markets and gold and silver specifically. And we're about to jump in and talk about the fundamental outlook on grains. And if we have the dollar rising along with a bearish fundamental outlook, it could be adding for a negative setup in the grain markets. So let's take a look at the fundamental setup in the grain markets. Okay, we had some very important crop reports about the outlook for the ending stocks and how much soybeans, corn, and wheat that the USDA thinks the world is going to have coming into this year. I know I'm usually looking at charts. I'm a technical trader, but since commodities are supply and demand driven, I think you're setting yourself up for failure if you do not pay attention to the basic supply and demand fundamentals of these markets. And that's why I'm going to highlight it today. I'm sorry I didn't have a report last week to really hit on it then when it came out. But long story short, U.S. corn ending stocks are expected to be at highs that we have not seen basically back into 2018, 2016 level. This is being driven by a very positive outlook on the yield that we're going to have in the corn markets and the ending stocks we have right now, which is really unbelievable that we have a good supply of corn and soybean out there, considering that Ukraine, the war there has really stopped the planting and growing of a lot of these crops. So this is a very bearish poll on the corn market right now because if we have more supply, price should be going down. And when we jump into the charts in a minute, you're going to see it was a bad week for corn this week, and it was also bad for soybeans. So with that said, let's take a look at this soybean ending stocks. Even more bearish here. Look at this record tons of soybeans we're expecting in the world for 2023. This is very bearish on the soybean markets. We're expecting great yields and great crops again. So this is going to be pulling down on the soybean prices right now. And this is important for us to know because my technical indicators are saying that we're set up for a rally in corn and soybeans right now. But the fundamentals aren't there. Supply-demand dynamics are out of alignment right now. And it's going to make it tough for us to see meaningful rallies in corn and soybeans. I'm not going to pull up the chart on it, but the wheat market has basically the opposite setup right now. Looks like the wheat crop in Kansas and Chicago in the United States is going to be poor right now. Ending stocks are low in wheat, so we have a bullish fundamental setup in wheat, bearish in corn and soybeans. And so I'm going to be looking to align my trades, looking for technical indicators that are giving me buy signals in wheat and sell in corn and soybeans. So enough about the fundamentals. Let's jump into the charts for the grain markets. All right, taking a look at the soybean chart, aligning with that crop report I told you about happened on Friday, the 12th. And so you can see here that, the market was slow to react. And then this week, soybeans just went into a decline based on, my opinion, fundamentals. A lot of supply we're expecting in the future. And we'll hit on it more when we look at wheat. But the agreement with the Black Sea exports for Ukraine and Russia was extended for another 2 months, which means that supply there should be making it to the market as well. More bearish indicators for the soybean market going forward. You can see here we're definitely in a decline with the trend of momentum. So I may have some other extremes that are saying that we could be making look for a reversal, but I'm looking for and taking sell signals in soybean anytime we may rally until it becomes clear that we've made that floor in the price of soybeans. It may require some weather changes, but that's my outlook right now for soybeans. And if we take a look at the corn chart, you can see that it's very similar setup with corn here the last week. Same thing happened. Crop report came out, didn't have an instant reaction, and then this week, along with the agreement on the exports out of the Black Sea, corn prices fell to basically new lows, 52-week lows right now in corn. And you can see here that we had the same similar setup. We had a rollover back here in April. Maybe kind of people got a wind of, it was looking pretty good for these crops, and we've moved lower. So despite some of my other setups of the COT report, I think we're still looking at and should be taking sell signals in corn as well. Now let's end things off with wheat, where I think we have the opportunity to go long. All right, we're going to finish up today with the wheat market. Looking at this chart, you might say, Kevin, that doesn't look very bullish to me either. Very clear downtrend, moving lower, and we've just been moving down, making new lows every time. But here this week, if we can move higher on Monday, we might be in the process of making a bottom in the wheat market. I took these %R trades here on this one, sell signal buy, this one here buy, but just like the other markets, I was looking to have a longer term wheat position get held here, but with the announcement about the exports continuing out of Ukraine for at least 2 more months, that caused this decline in wheat along with the soybean and corn markets this week and the move lower. So why do I think wheat is a bullish trade with this trade setup? One, fundamentals are bad for wheat right now. Looks like we could have much smaller crop for wheat. But then as well, I've been encouraged by this commitment of traders report. You can see here starting back in October of last year, the producers and users of wheat have been aggressive buyers this entire time. They just keep adding to these positions. They're driving the open interest in the market, which highlights to me that there is a high demand for wheat right now, but the price keeps getting lower and the commercials are just in there buying away as wheat keeps going down, which I think is going to help secure the bottom in the wheat market here in the coming weeks. As well as we have wheat undervalued against gold, the US dollar, and bonds. And my favorite indicator out there for calling the bottom, the pinch punch indicator, has now crossed above 40, indicating to me that the bottom is forming in wheat. I'm not going to show the charts right now, but I'll tell you as well, when it comes to the DeMARK indicators, we have buy signals for sequential and combo on daily and weekly time frames. It looks to me like the selling in wheat is going to be coming to an end, and we're making a bottom right here, right now. And that's why I'm looking to take buy signals for both short-term and longer-term trades, building my position in wheat. Thanks again for watching Just Some Guy Trading. Please hit like and subscribe so you continue to always know when all of my great content comes out. Good luck with your trading this week, and don't miss my special report coming out this week on the Nasdaq and the S&P 500. Thank you.